Well, for more on the trade fair and the announcement of a new stock exchange, I'm joined by John Gong. He's Professor of Economics at the University of International Business and Economics in Beijing. He's currently joining us from Israel. Welcome back to the show.
Thank you.
So first off, what are the main goals for the Trade and Services Fair, and why is it significant?
Well, a country as large as China, being the second largest economy in the world, probably can accommodate a third stock exchange. Just like the United States, for example, in the U.S., we have the New York Stock Exchange, NASDAQ. There's also this what's called an OTC market, over-the-counter exchange market. Now, the proposed Beijing Stock Exchange is actually not entirely new. There's already a sort of exchange, not as we understand an exchange in a traditional sense. It's an exchange called the National Equities Exchange and Quotation System. What it does is that it's a place where companies can exchange shares, equity shares in small and medium-sized businesses and for settlement. So there's already a foundation here. This so-called exchange has been in operation for many years, and my understanding is that the proposed stock exchange in Beijing is going to be a selection. Initially, it's going to be targeting a selection of a few dozen very good companies on that exchange that see more frequent transactions, and there's some liquidity associated with that. To be the first companies to be listed on the Beijing Stock Exchange. So this is actually not entirely new. It's an evolution of something that's already going on. It's not just an evolution. It's an evolution as well as a refinement, a new development on top of something that's already been going on for quite a few years.
So why do you think this focus on small and medium-sized companies?
Well, I think we already have these two exchanges in Shanghai and Shenzhen that see listing of quite sizable companies. But this is the fact is that we don't have something similar in the United States. It's called OTC markets, or what's also called trading of these pink sheet companies, right? The old term is called pink sheet. What it means is that the pink sheet companies are smaller. They are, the transactions of these companies, trading of these companies, you don't see a lot of liquidity, less frequent than at these two big stock exchanges. And the idea is that these place for these companies could serve as a feeding exchange. In other words, I think the government has already said that for those companies that have gone bigger and you see enough liquidity, companies can be moved on to the Shanghai and the Shenzhen stock exchanges. So it's sort of a feeding stock exchange if you think about it, right? So I think in this sense, there is indeed a necessity because there are hundreds and thousands of quote small and medium-sized companies. Now let me give you some examples. Actually, the companies that are currently traded on a national equities and exchange and quotation system, they are not all entirely very small. There are some companies whose revenues are exceeding billion RMB. Billion, that's about $150 million. So this is actually pretty sizable companies, not just really small companies. So I think there's a need for those companies to be publicly listed, and when condition matures, they can be moved on to the two big stock exchanges in China, in Shenzhen and in Shanghai, respectively.
So then, how will this stock exchange help deepen structural financial reforms in China?
I think this offers many more opportunities for the investors. It offers liquidity. It offers opportunities for investors to invest and trade. And I think also, more importantly, it also offers an opportunity for the city of Beijing itself to develop something as a sort of a financial center as well. I think if you think about China's economy in general, most of the economic activities are centered in the south of the Yangtze River. And I think in the north, there got to be something that's acting as a center of activities to boost economic activities, to provide more jobs and growth opportunities in the financial sector as well.
And just very quickly, I have about 20 seconds. What types of investors do you think will gravitate to the offerings at the Beijing Exchange?
I think they are normal investors. Other than that, they're probably more there's probably riskier because we're talking about small and medium-sized businesses after all, and typically the price swings of these stocks can be much larger than the two other larger stock exchanges. And that I think there might be an opportunity, there might be a probability that some of these companies cannot do very well and go south. So I think normally, they are normal investors, stock exchange traders. Other than that, they probably have to take on higher risk.
All right, thank you as always. John Gong there, Professor of Economics at the University of International Business and Economics in Beijing.